Hey, welcome back. I'm Toni Taylor with Interconnect Mortgage here in Palm Beach Gardens, Florida, and today we're tackling one of the biggest questions I get asked almost every single week. Should I rent or buy in Florida right now? And I'm going to give you an honest answer. Not the rah-rah, just buy the house answer, the real one. Because the truth is, renting is sometimes the right call, and I'll tell you exactly when. But I'm also going to show you what's changed in the Florida market right now that lots of people are completely missing and why the math might look different than you think. Let's get into this. So, the number one thing that I hear from people sitting on the fence is interest rates. And I get it, I do. Watching the rates climb from the threes felt like a gut punch for a lot of people. But here's what I want you to think about. Renting has its own cost, and that cost is what is going up too. Rents across Florida have increased significantly over the last several years. In a lot of markets, you're paying more for rent than you would be if you owned a comparable home. And at the end of that lease, you hand the keys back. There's no equity, no asset, nothing. So if you're renting because rates feel high, I want you to ask yourself this question. Am I actually solving my cost problem, or am I just trading one cost for another? Now, here's what's happening in the market. Right now, that I think is really important. Seller contributions. In today's market, motivated sellers are contributing to buyer closing costs more than they have in years. And in some cases, they're buying down your interest rate. That means your out-of-pocket cost closing can be significantly reduced and your monthly payment can be lower than the rate on the paper suggests. I'm seeing this in real transactions right now. Not every deal, but it is a real negotiating tool that smart buyers are using. If nobody has talked to you about seller contributions yet, that's a gap, and that's what we're here for. Now, let's talk about Florida homeowners insurance, because I'm not going to pretend it hasn't been painful. It has been. But here's the update nobody's talking about. More carriers are re-entering the Florida market, and competition is coming back. Some of my clients are actually seeing premium reductions compared to where we were 12 or 18 months ago. Is it back to pre-2020 levels? No, but the direction has changed, and that matters when you're running the numbers on a purchase. And this is the part I'm most passionate about. Every single month you own a home, three things are happening at the same time. One, you're building equity through principal reduction. Every payment chips away at what you owe. That's yours. Two, your home is historically appreciating. In Palm Beach Gardens specifically, the 10-year average appreciation has been 5.82% annually. The 63-year average is 4.43% per year. Even at conservative numbers, the compounding effect of that appreciation over time is enormous. Three, you're hedging against rent inflation. Your fixed mortgage payment stays the same. Rents don't. 5 years from now, your neighbors who are renting will very likely be paying more. You won't be. Wealth in America is disproportionately held by homeowners. That is not an accident. Okay, so I told you I was going to be honest, and here it is. If you're planning to sell or move the next 2 or 3 years, buying is probably not your best right move. The cost of getting into a home and the cost of getting out of a home is significant. Between closing costs on the way in and transaction costs on the way out, you may not recoup those costs in the short hold period. Renting makes sense when your timeline is genuinely uncertain, when you're planning to move within 2 or 3 years, or when your credit or financial picture needs some work, or when you're still saving and not quite ready yet. There's no shame in any of that. Buying before you're ready isn't a win, it's stress you don't need. The goal is to buy when you're genuinely ready and what makes sense for your life. One more thing that's specific to Florida that a lot of people don't factor in is the homestead exemption. Once you establish your primary residence in Florida, you can receive up to $50,000 exemption on your assessed home value for property tax purposes. That's real money back in your pocket every single year. Plus, the Save the Home R cap limits how much your assessed value can increase each year, currently 3% or the rate of inflation, whichever is lower. So once you're in, your property taxes are protected from runaway increases, even as your home's market value climbs. Renters get none of that protection. So here's the bottom line. There is no universal right answer to rent versus buy. Anyone who tells you otherwise is oversimplifying your life. What I can tell you is this. If you've been on the fence because of rates, the market has shifted in ways that deserve a fresh look. If Florida is home for the foreseeable future, if your income is stable, and if you're thinking long term, the math almost always favors buying. When you extend that timeline out far enough. And if you're not sure where you stand, that's exactly what we're here for. No pressure, no pitch, just real numbers, specific to your situation. 2 ways to take the next step. Grab the free Florida pre-approval checklist at the link below, or book a free 15-minute call with me. Links are in the description, and I'm Toni Taylor with Interconnect Mortgage. Thanks for watching, and I'll see you in the next one.